Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts and independent advisor Vivek Mavani, TS Harihar of HRBV Client Solution. He's a little delayed, but he will be in here. And independent advisor Sharmila Joshi join me on the show. Thank you to both of my guests for joining me. Today on Hot Money, we'll discuss what's gone wrong for Page Industry. It is down almost 35 to 40% from the recent highs that it had. So, and today, one of the biggest drags as far as the stocks in the F&O side is concerned. Delta Corp has been doing well. We asked whether the rally will continue and is it a good time to start accumulating. What's with Midcap IT, with Tata Elxsi coming out with numbers tomorrow? Midcap IT of late has been a little jittery. What's the way ahead? And Bharti twins are doing extremely well. Both Bharti Airtel and Bharti Infratel have been doing extremely well. We ask what's the way ahead for all these counters. But let's start with the first one, and that's pretty much the stock of the week, the stock of the day also. Page Industries is down almost 3% in trade on heavy volume. So what's gone wrong for Page Industry? We'll ask our guests. So Vivek, I'll start with you. What according to you has gone wrong for Page Industries? It's corrected almost 30-35% from the recent high. Is this something that you're sensing?
Yeah, of course. So the story of Page is similar to story of iShares that we discussed last week. I was talking of iShares. That both these stocks in the last 7-8 years consistently delivered quarter after quarter 25% earnings growth and a serious moat around themselves with supposedly limited competition, but what 2008 has shown both of them is that a serious slowdown in terms of sales and earnings growth. While the heady 25-30% growth rates in earnings continued for almost 7-8 years in case of Page, the valuation multiples re-rated multiple times to be, to as high as 100 times earnings few months ago. Sometime in 2018 at the peak of when it was 36,000 stock price. It was almost 100 times earnings. Now what we have is growth rates moderating, competition increasing with Van Heusen having launched innerwear directly in the same price points as Joshi, which is Page Industries. Fruit of Loom also getting aggressive with retail and distribution expansion, while the traditional, the Rupa and the Lux, the VIP, the local players playing price warriors and also upping the game in terms of the shift from unorganized, unbranded to the branded plays, where Page was one of the serious beneficiaries. In case of Page, the growth moderation also is surprising because last 2 years they've also expanded the product range to include leisure wear, to include women wear, night wear, and it has also happened with distribution and retail expansion. So retail expansion, product expansion, and yet you have slowdown in sales and earnings growth is slightly surprising. It may be surprising for us, but for market it seems disturbing. So what we have is those 100 times earnings having come to about 40 times, or about 60 times earnings, about 60 times earnings now on revised lower earnings estimates. Nevertheless, it still seems richly priced if we are talking of, or if the long-term expectation is 12 to 15% growth, then even 60 times seems difficult to justify. So I think there could still be further downsides in case of Page.
Okay, Sharmila, what's your view on Page Industry? Will the downside continue or will it stabilize at this level now?
Hopefully, I think it should stabilize. But I think also what is happening is that, to just add to what Vivek was saying was that, yes, absolutely, here you had a stock which had pretty much held its own in 2018, where you saw carnage in most of the mid-cap space. So, when you get this kind of a feeling that perhaps numbers are not going to be what they used to be, you've had this 9-10 quarter-on-quarter growth, and now you see some kind of a slowdown. So market doesn't take very kindly to it. Plus, you are trading at a sort of a very, very rich valuations as compared to the rest of the pack. And I think somewhere, I would also like to add furthermore that perhaps now this is the time of the year when people are also re-evaluating their stock ideas with the perspective that you're rolling over to the next year earnings. And then if you have this kind of a shock, I think, there will be that rebalancing. We've seen it with iShares. We've seen it with Page now, and we are seeing it on the positive side with Titan, where people are actually expecting better things. So you're actually going to up your guidance there. So you're seeing more buying coming into Titan. So perhaps I think that could continue for a bit, because post the earnings this quarter, that's when you will see this rejig sort of happening. So perhaps I think the pain could continue, and I think there's no taking away from the fact that there is increased competition for them. So they're not going to go back to those kind of valuations. But I think that perhaps now that valuation catch up has sort of happened, and you could see better times for Page.
Okay, Hari, a few months ago, Page was at almost 36,000 levels. Do you anticipate that probably this time we will be looking at sub 22,000 levels on Page? And what according to you has gone wrong?
Say probably yes. We could look at probably 5-10% lower from here. But frankly, if you ask me as an investor, would I look at Page? The answer is yes. I would look at Page at these levels. And the only concern I have is the operating profit margin, I think, which fell by about 250 basis points in the last quarter. Now, if this downtrend continues, then I think there is a reason to worry about the 55-60 times earnings that the company is getting. But if that is not the issue, then I think the fall in profits that we saw in the last quarter, September quarter, was largely because of this lack of synchronization in the earnings season. I think once that is taken care of, the company should probably get back into the normal growth path. See, 50 to 60 times earnings, if you ask me, I don't think is too high for a consumer stock in India. And if you look at any of the consumer stocks, be it the FMCGs, be it the food, be it the stocks like Havels, most of them are quoting at those very, very expensive valuations. So I think as long as they can sustain that 20% kind of a growth, I don't think 50-60 PE should be much of an issue. So I think considering that the stock is down about 40-50% from the peak, whether it could go down, yes, another 10%, I wouldn't be surprised. But we would definitely start accumulating the stock at these levels.
Okay, as Vivek also pointed out, people were saying that, they would, Page would maintain that multiple that, it's getting into women wear, leisure wear, swimwear, all these things where growth will come in. Somehow that hasn't worked for Page, right? Or it has, and it will come out in the next few quarters.
See, what we have seen in a lot of these companies is that when they get into a new area, which is actually not their core competence, it takes a long time, and more often than not, it doesn't really take off at all. So we are looking more at the Page core business of innerwear, where we believe that they really have a strong leadership position. So we are not really worried about the new diversifications that may or may not take off. We are not too sure. But I think the core innerwear, as we look at it, is a consumer space, and we see the valuations of 55-60 kind of sustaining for that business.
Okay, so that's the view that's coming in on Page Industries. Again, a little bit of concerns that are still there. Valuations are still expensive according to some of our experts. So potential correction can't be ruled out for Page Industries. The next stock we want to talk about is Delta Corp. Of late has been doing well for itself. I don't know what the counter is doing today. Let's pull up Delta Corp and see what it's managing to do. It's up another 1.5%. So slowly, steadily, Delta Corp seems to be consolidating. No news as such, but what's the way ahead? Sharmila, Delta Corp, what's your view?
Well, honestly, it's a stock that I like, and it's a story that I like. But I think, the concern in the Indian context becomes this overall attitude that we have towards sin stocks, and our policy is not very clear in terms of what kind of regulation there is going to be for casinos, etc. going ahead. And we've had hiccups on Delta in the past because of that. You've seen their Goa casinos go through a lot of issues. Now, of course, they have that Damandiu also that has started. Plus, I believe there is something in Nepal that is coming up. Then there is that whole online gaming business. So very honestly, I like all their lines of business. I think for me, the concern is more on the regulatory front than anything else, because I think these are all good growth businesses, and I think in a different environment, they would have grown much faster. But I think even with the kind of restrictions that they have, they've managed to sort of slowly over the years grow their business. So in fact, as a disclosure, I own the stock, and I would continue to be positive on it.
Okay, Vivek, what's your view on Delta Corp? Should someone take a positional bet on Delta Corp at this point?
Well, my personal indifference to Delta is known. I mean, we have discussed this stock on this very show a few months ago. So although the stock is corrected almost 40%, I mean, or 35% from highs of 400, I mean, it's about 260 whereabouts. So 35% correction. I'm still negative to or at best neutral. And for me, I'll just continue the thread which Sharmila mentioned in terms of regulatory risks or regulatory overhang. Any business where government could exercise disproportionate control, at some point of time, there will be some state or central government regulation which will make the business difficult to do. Unless it is cigarette or liquor where you have tremendous pricing power to be able to pass on the price increases and still get away with, because regulation allows you to do business but makes it expensive to do it, and cigarette and liquor companies have that pricing power to still sustain that business and maintain margins. Unfortunately, Delta is not in that kind of a business, because at some point of time they would have to rationalize between taking price increases and foregoing volumes. I mean, price increases versus occupancies. To two sharp price increases could just take the business away to places like Sri Lanka or Nepal or even Dubai or Southeast Asia, where also I would say online, not online, but gambling and gaming centers are coming up. A lot of so that risk would always remain. What we have in Delta in terms of valuations is hopefully a huge potential for future, because that is what the valuation seems to suggest. So far, if I were to look at track record and what they have delivered, sub 10% return on capital, huge amount of debt on the balance sheet. I mean, I would find it difficult to justify those valuations, to be very honest. So I would be indifferent to it, at best neutral. Probably I'll be negative, but I will certainly not be buying into Delta.
Okay, what about you, Hari? Do you like Delta Corp? Or?
See, at the outset, we avoid demerit stocks. Any of these, so-called sin stocks as cigarettes, liquor, we normally don't buy any of these stocks, notwithstanding the growth. So from that perspective, we anyway won't touch the stock. Having said that, I think two things that are interesting. One is the business model. There is an old saying in Britain, in the 17th century, that the house never loses. And that is what actually applies to a casino. A casino never loses. People come and lose, people come and win. There are two things I would like to point out. One, I think the point that Sharmila made about regulatory issues, I think that's a very, very serious risk. For example, let's say we have a government that is suddenly a little too prudish. We may suddenly have very, very strict restrictions coming on this kind of a business, and that would entirely take the whole business model for a toss. The second is, a lot of people who, in my acquaintance, who do gaming frequently, they tell me that the ecosystem that they have created in Goa or Daman is nowhere comparable to what you would get in a Nepal or a Macau or forget about Las Vegas. They're talking about the areas that are close by. So they are saying that ultimately gaming is not only about the number of options you have, but it's also about the ecosystem. And they think the ecosystem at Goa and Daman is nothing compared to what you'll get in a Nepal or even in a Macau. So in that perspective, I think the growth of the business from these levels, let's say in the next 5-6 years, to me is a big question mark. But having said that, as I said, we don't touch this sector, so we don't buy these stocks anyway.
Okay, so that's the view that's coming in. Sharmila, just a view on Delta before this, since you own the stock. What's the key trigger? Are you playing it for the Daman license that they probably get, because that's not coming in for a while, and that's probably. But what's your key trigger? And do you see?
I hope exactly the opposite of what Mr. Harihar is saying, that you will get a government which sees the sense in really taking this to the next level of ecosystem. Because I think there is, even from a government perspective, there is good money to be made here if you regulate the business properly and you identify an area in which it can be had. So there are multiple benefits. Look at how they really dealt with it in Vegas, because it's you're in a desert. There is nothing there but everybody going in for this one game and this activity, and everybody likes it. And then so many other industries have grown around it, whether it is entertainment, whether it's tourism. I mean, so many things have come up. So I hope that there is some government that takes exactly the opposite view and really encourages and regulates this business going ahead. And even as the businesses, I think there is tremendous, there is tremendous demand for casinos within the Indian context, even with the kind of a system they have. So let's hope things don't get worse for them. I don't think really that they can really with what we've had so far. And they've seemed to have managed.
Okay, so that's the view that's coming in on Delta Corp. We have a positive view and one neutral view and one somehow negative view on Delta Corp. So it's a 360-degree view that you're getting in on the counter. The second last stock that we want to discuss is basically the sector. It's the Midcap IT sector. Of late, we've seen a huge amount of correction that's coming in on at least the Midcap IT counters like Tata Elxsi, Tata Hexaware, Persistent, KPIT. All of them have been reeling under a little bit of pressure. But is this the right time to accumulate since we're going into earnings season? And will they be able to maintain the momentum that they had in the earlier season? We'll ask our guest. Hari, what's your view on Midcap IT? Have you recommended Midcap IT to any of your clients recently?
Yeah, frankly, we do like Midcap IT as a space, and I think a couple of things. One is that Midcap IT space tends to be a little more vulnerable to the rupee movement. So, in the last few, probably I would say a month and a half, when the rupee has been strengthening from 75 to 69, we've seen a lot of these Midcap IT companies take a hit. So I think that is more of a technical concern that we see. But I think at a fundamental level, what we see is that mid-cap companies, we're going to be a lot more stock specific. Unlike the large cap where you can see you buy either Infosys, TCS, Wipro, Tech Mahindra and you will make money. I think it's going to be a lot more stock specific in the mid-cap space. And we actually like one company which is extremely linear, that is L&T Technology, which is extremely linear as far as the transport technology area is concerned. And that is primarily the entire focus is put on that. So we like companies that are extremely focused. You can say that there is a concentration risk, etc. But I think we like companies with very linear technology. So we are not very positive on the others. We used to like Mindtree before, but at this point of time, I think L&T Technology is the only stock that we like in the mid.
What's the rationale? What's your key? Give me 2 or 3 key trigger points, except for this transportation technology. What makes you bullish on the company?
One is we believe that over the next 2 or 3 quarters, we expect the operating margins of the company to gradually expand by about 200-250 basis points. That is one. Second, I think the order book has been expanding quite rapidly. If you look at the last 2 or 3 quarters, the order book has been expanding, and I think that is probably going to be the key trigger as far as L&T Technology is concerned.
Okay, Vivek, what's your view on Midcap IT? Have you recommended any Midcap IT stocks to your clients now?
No. I'm actually neutral on Midcap IT, and there's actually a valuation perspective. I mean, nothing wrong with any of the companies on the growth side. I mean, all of them have delivered to what they have indicated maybe 2 years ago, 1 year ago, or any time in the past. The 2018 Midcap IT saw a sharp rally, which was when the valuation multiples compared to large cap IT were at serious discount, and the discount factor narrowed, which is where you had a sharp rally in mid-cap IT. Now what we have is that the valuation multiples are comparable to the large cap IT, and if I were to take a TCS or an Infosys as an example, I mean just a comparable for argument's sake, then the discount factor is not very large. Growth rates are also similar, whether it's about, I mean, most of them seem to be growing in the region of 18 to 25%. I mean, all mid-cap ITs, including large-cap ITs, TCS, of course, being an exception, which is growing closer to 25%, 20 to 25%, or 23-24% kind of earnings growth. So when you have comparable earnings growth, comparable return on equities across large cap or mid cap, then obviously large cap is preferred. So for me, the preference is large cap simply because of the valuation gap is not very large that we saw maybe 12 months or 18 months ago, which is what led to that rally. Now these re-ratings when multiples expand does not happen every year. It probably happens once in 3 years or once in, it takes a while to happen where mid-caps deliver earnings quarter after quarter, but stock price lags and hence their multiples tend to grind down, and then one fine day you have a 6-month period that they move up sharply and those multiples bridge the gap. That bridging of gap has already happened. Now I don't see a comparable opportunity which is more attractive in mid cap. I'm indifferent between large cap and mid cap, so hence my preference is large cap.
Which large caps? What's your pecking order in large cap?
TCS being the top pick, Infosys and Tech Mahindra being number 2 and number 3.
Okay, that's the view that's coming in. Sharmila, mid-cap IT, do you recommend to your clients, or have you been accumulating or in the recent fall?
So I don't want to really repeat everything, but broadly I agree that you had this whole valuation gap, and that was always the big reason to recommend mid-cap IT, because the valuation gap between them and large cap is too large. Now in fact some of them overtook the large caps, which is when you saw the correction coming in. So that's it. I think you need to be stock specific. I completely agree on that point. And you need a sort of a IT business which is niche. So because mid-cap IT, especially when you're talking of mid-cap IT, because if you don't have that niche, then they are anywhere more susceptible to all these cross-currency situations and country-specific situations, etc. So I do like some of the names that both of them mentioned, as well as additionally maybe a Tata Elxsi whose numbers are coming out, or a Persistent. And within the large cap, I think HCL Tech could be an interesting stock to look at, because they did that recent acquisition with IBM, which market has not really liked much because it's a product-based acquisition that they've done, and they don't have any expertise in that area. So it is a risk that they've taken, but I think if this risk pays off, this could be an interesting stock to watch.
Okay, so that's the view that's coming in. Not too much of favor as far as mid-cap IT is concerned, except for an L&T Tech, which is spoken among the mid-cap IT, but large cap certainly seems to be the preferred choice at this point of time. And the final stock is basically the Bharti twins. Both of them have been rallying significantly of late. No major news coming in as such, but both of them are doing extremely well, except the only news that I read was the TRI data in terms of where Bharti Airtel managed to up the client base or number of additions that they had. So is there a fight back that Bharti is doing as compared to Jio? We'll ask what's the view on Bharti Twins. Is it a time to start accumulating in either or both or none? Vivek, I'll start with you. Bharti Twins, any of them, I give you a choice. You can take either one of them, both of them, neither of them.
Okay, I'll see, basically, from the 52-week lows, which was in September, October, that both of them did, I mean, probably the rally is about 15 to 18% as we talk now. In case of Bharti Airtel, and probably has an impact on Infratel as well, there was this news that Bharti Airtel intends to raise about $1 billion by placing or divesting about their stake, part of the stake in Infratel. They'll still maintain the management control, but place it with either strategic investors or PE funds or whatever. I mean, that seems to be the stated intent. What it does to Bharti Airtel, it gives them an ammunition to fight Jio, where severe price competition in the last 2 years has eroded margins. Their subscriber base also seems to be getting eroded, and the way the whole business seems to be now shaping up. Bharti clearly seems in a weak spot where there is convergence of voice, data, entertainment, e-commerce, and television, all of it on a single network, where with home consumption as well as out of home consumption also getting together. I mean, earlier your mobile and your home networks were clearly apart, but now even that with Jio is bringing even that together. For Bharti, that clearly is a weak spot in terms of fighting that, where their traditional business of mobile, I mean the voice and data clearly is just getting commoditized, where it's moving to a fixed pricing, unlimited volume. What this $1 billion probably will give them is at least a better chance to fight back, but in the longer run, it's clearly going to be a losing battle for Airtel. For an Infratel, it's just a utility play in terms of owning an infrastructure for which they get a certain fixed fee for use of that infrastructure. So there really is no upside in terms of that business, barring the volume growth, for which volume growth also whether they can get compensated adequately. Both of them will remain in trading ranges of about 20-25% through the year. So, and they seem to have fairly defined trading ranges. So say Airtel, for example, at about 270, 280 on the lower side, 330, 340 on the higher side. Similarly for Infratel at about 230, 240 on the lower side and 300, 310 on the higher side. One can play those ranges, but I don't think in long term, medium to long term, they make any investment sense, either of them.
Okay, that's the view that's coming in. Hari, your sense on Bharti Twins?
See, frankly, I think telecom is a sector that is hard to bet on, considering everything from the huge cost that government imposes to the price competition. But I think if you were to just compare these two, I would believe that Infratel, as far as I'm concerned, is more a subset of Bharti Airtel. So I wouldn't really look at that as a separate company. And anyway, we are not too positive as far as the infra companies are concerned, or the tower companies are concerned. If I was to take a relative look, I think there are some things that are working in favor of Bharti Airtel. I think number one, the combination of Vodafone and Idea seems to be gradually imploding. And if you look at in terms of the ARPUs of these people or the way they have been losing clients, I think the debt actually seems to be too much for the company to handle. So we believe that as Vodafone and Idea lose customers, the big beneficiary is actually going to be Bharti and of course Jio to a large extent. What we also understand is that if you look at the latest TRAI numbers, while Airtel seems to have a good network across the large cities, Jio seems to be doing better in grade B and grade C cities rather than the grade A cities. So I think that again is going to work in favor of Bharti Airtel. So broadly, I think there are some business related issues that are going in favor of Bharti. More importantly, I think if they're able to monetize their Infratel subsidiary as well as their properties in Africa, I think that would give them good ammunition to fight with Reliance Jio for another probably 2 to 3 years. So I think like Bharti, considering the stock is already corrected substantially, I think the price risk to me looks to be too less at this point. So Bharti Airtel is probably a stock we would buy.
Okay, and what about you, Sharmila? Any view on the Bharti Twins?
Well, I wouldn't really recommend either. And I think this business is fighting a battle on many, many fronts. One is, of course, this whole Jio coming in. Then again, I think what Vivek was alluding to, the nature of the business itself is undergoing such a big change with voice and data getting commoditized. And, now you're looking at it as a platform to provide so many other things, etc. And, I honestly think that somewhere, whether it is Vodafone, whether it is Idea, whether it is Airtel, they're really on the back foot now. Because, now I think the fight is getting interesting, because in the beginning, people took Jio as a sort of a second connection because they were giving you this great data plan, etc. But now I think they're really eating into both Vodafone Idea as well as Airtel, and I think that's what's going to really continue there. Now you are actually going to see that cannibalization in that space. So I don't really see anything much to recommend, and I think Bharti Airtel and Vodafone Idea both are strapped for cash. If this Infratel deal happens for them, hopefully they'll be on a better footing. But honestly, I think at this point in time, I think going from that on the ground experience of the number of telecallers who are calling you, I get calls to pay my bill even before it is due and things like that. So I think there is something very seriously wrong here. So I wouldn't recommend either.
Okay, so that's the view that's coming in on Bharti Twins. But with that, it's a wrap on this edition of Hot Money. Hari, thank you so much for coming in. Vivek, Sharmila, thank you so much for coming in and sharing your view. Ask BQ comes up next. Stay tuned to Bloomberg.